Greetings, traders. Huge range expansion now. You're getting your lowest tick readings of the day at 937. We're down to 1575 3/4. Continue to see volume drop off. We're now printing red bars on the advanced decline. You're at 4-to-1 negative on both NYC and NASDAQ. Extremely bearish territory here on the double stochastic for the UVOL-DVOL ratio. When we crossed zero, that's when you saw this big gap down through the opening range, and we're now down at the 138.2 extension. May see some buyers stepping in here. You actually got a little bounce off the 150, but this market is going to continue to the downside. I think we've seen the end of a major bull market. That was exactly the action we've been giving a prelude to for some time now. As you saw, several days on the market profile of the lowercase b, where people were getting filled at very bad prices, and they continued to bid it up to try and get out of those prices, I would imagine, and leave it to someone else. And eventually everybody just got tired of playing that game, and that's when you saw your ultimate high yesterday. And since then we've gapped down overnight, and the market opened this morning to a little bit of buying, just because we had gapped down quite a bit. So some of the traders tried to fade that gap at the open, and when they realized we were not coming anywhere near getting back to the value area low, they gave up, and we didn't quite make it there. You can see the value area low was right here, at 1587, and we came in at the high of this tick was 1586.25. So we were 3 ticks away from even approaching value area low. The closest we actually came to it, once breaking below, was, I believe, on this candle right here. We came in at 1586.75. So we were within a quarter at that point. But from that point on, we continued to go lower, only held up by the support of the moving average. Failed there, came back up, tested the moving average on the top side, and we've continued to accelerate down. You are getting a bid here, though, off the 150 extension. Let's see how much this bounces us back up. This market has been building for 5 years now, I believe, 1,500 days. God, close to 1,500 days. I think we're at 1492 at this point. But I'd be remiss to say that there's no possibility of an extension back up towards the top. I did predict or forecast if we had a parabolic move like this, like we did over the last 2 days, that you were going to see a similar move back to the downside, because that's the type of overextension that we needed, where we were already overextended. To go any further, you're going to see a big gap in contracts here that you see right here. It's clearly evident. There's no one that can step in here. There's no volume. Nobody's holding any positions at these levels. So the only way we can stabilize and get back up into this range is for prices to get bid up right now and catch a bid right in this area, right over 1580. Realistically, right at 1582 is where you're going to first start to catch a bid, 81.75. If we can get back into that range, there is a possibility we will see a continuation of that ending diagonal. I haven't looked at it on a longer term interval to see if the formation has been broken. I will follow up on that. Again, I'd be remiss to not do that, but just looking here, you can see we've entered on, this is a 10-day 21-minute interval chart, just because our tick charts with thinkorswim are unfortunately limited to 5 days. or I would never go off of tick charts. I think you can see a lot of different patterns with tick charts than you can with time-based charts. But be that as it may, we have entered into extremely negative territory here. We first entered it right here when we gapped down in the overnight at about 10 o'clock last night. You saw your first red dot right there, and that's when the ergodic oscillator broke below zero. We have not come back into that area yet, despite the strong selling, which leads me to believe that you're going to see these lows actually eclipse today. We're going to go and probably test it back down in here into the value area of the last 10 days. And people don't realize that if you look at value area charts in the auction theory, we are so far away from fair prices here. The fair pricing for the last 10 days is 1545 to 1567 half, okay? And the fairest price in that interval was at 1561. So for us to have traded up here, and if you followed it, it was on light volume. I'm not showing it on the chart here, but both of these days were on considerably light volume. I think this day was half the volume of the previous of the week prior. So that's mostly amateurs up there thinking that they're going to jump on board and the rally is going to continue, and the smart money has been distributing for the entire past 2 weeks of consolidation. So these were just the unfortunate people that got suckered in right at the last point, and usually amateurs are the type that don't like to take a loss, so they're going to hold on to their position and not take the loss, and it's going to start to really get away from where they bought in at, and then they're going to be forced to liquidate, and that's when you're going to see this thing really accelerate, when you see the amateurs realize that the market rally is over, and that's when it's really going to get ugly. The retail money is going to leave the market. The smart money's already left this market. It's been moved into other sectors of the economy. Bonds, for instance, have seen a nice boost. You can see a lot of money is being moved out of gold right now, and I don't know exactly how that's going to play out yet. I think long-term gold, you're going to see kind of a continued coiling at a little bit lower prices, but I think you're going to see more money coming into bonds, and the market is going to continue to unravel, though. That's my main concern, and I'm going to continue to follow the strategy that we've been doing here for the last month, and that is we are going to trade our options on the futures contract, the weekly contract up till expiration, and for those that want to trade along with us, we'd be glad to advise you on the trade. We would probably wish that you would go out one more week, just because the volatility you're going to see, it can get so extreme. If you do want to do that, that's fine. Just we won't risk as much money as we would normally, because we don't want to see a risk of ruin on your account. You got to be very agile with these trades going into expiration Friday. If you take a look here at the options for today, for example, we have 0 days to expiration. We opened up here, for example, let's take a look at an out of the money one. On the call side, we opened up at $4, currently at a 45-cent asking price, so a tenfold decline, and obviously this is most likely going to expire out of the money, and so you're going to see a 400. I mean, if you had that contract going in this morning thinking the market was going to rally for whatever reason, I mean, you just lost $400. So, but those are the kind of contracts we're looking at, and we're usually going to try and go with the trend, and we try and buy our contracts into the peaks of the tick indicator. So if the market is to the short side, we're going to wait for an extreme reading in positive ticks coming in, like right at this point right here. You're seeing a pretty high tick reading in comparison to the rest of the day. This isn't the ideal situation because we just had the lowest tick reading of the day, but we would come in here and buy a put option, for example, right into this area, and look to ride it back on a retracement back down to that low tick. And with a tick reading that low, it's possible that the market really is getting some conviction to the short side, and we're going to see even lower ticks further in the day. So that's what we're going to continue with going forward. I haven't really taken a break here. I had a lot to say this morning with everything that's happened. It's been right according to forecast, so it's pretty exciting. If we look at the market profile once more, I wanted to show you on a couple more intervals. Obviously we were here on a 21-minute and looking at our trend channel. Let me switch it up here, and we'll go out a little bit farther. We'll go to a 20-day, and then we'll go out a little bit farther than that too. We'll go 20 days at 55 minutes, and you can see we still could find some support down here at the bottom of the channel, and that'd be just beyond the 161.8 extension. I think you are going to see some support there though, because that does tie in with our moving average right here. It ties in with our exponential moving average here. This dot or dashed blue line, that's going to be your EMA, and of course that EMA is over the last 110 periods. So on a 55-minute chart, you're looking at roughly 110 hours. I don't just roughly, okay, so 110 hours, and our price over the last 110 hours is at roughly 1574. So we may see a bounce here in the next few ticks. We got a bounce right off the 50% line, which was right above that moving average, and that might have been the bounce we were looking for earlier this morning. But our longer term, or our shorter term simple moving average over 60 periods, you can see if we zoom in here, that was right where we opened up at this morning, just underneath that, and we got a wick up above there to cap the opening range and closed well beneath the 60 SMA. And on this other candle after that, we again tried to go and breach the 60 SMA and find support, and it just wasn't happening. And now we're kind of range bound between the two moving averages. And for our short trades, that still bodes well, of course, because these are both going to continue to roll over as price declines, or price, if it just stagnates here, these are both going to just flatten out, and you're not going to have any momentum to take it back up. And again, you can see the big gap you have here, and the reverse or inverted lowercase letter B that you're seeing here on the market profile, and that is not a positive sign for long holdings. That means that the majority of a fair price, and obviously the point of control right here in the middle of this clump of contracts, that's where fair value's been. And so all these people up here got bad fills, and unfortunately I think the market's going to come right back down into fair value, and these people might, if they don't get out now, which is going to ignite the move down, because they're going to be forced to sell at lower and lower prices because nobody wants to buy at these levels. It's just going to push us down faster. And again, it's right to forecast. You have a parabolic move up, it always resolves with a nasty move back down. And you combine that with the fact that we've been in a rising wedge. If you go look at profit charts from Tim Knight, I'll show you here. If you look at the SPX, there's been a pattern building here. If we go back out to the 1 year, this pattern, they may have been turned off. Let me make sure we got them back on. Another turn on. I maybe got to go out a little bit further in time. Let's go to 2 year. Forgive me, it wasn't on the index, it was on the spiders, the SPY. If we look on the SPY, you've already had a breakout symbol right here, right there. Rising. So we had a rising wedge, which forecasted a price target of 1479 to 1520 between April 3rd and May 5th, and from that price target you had a parabolic rise right out of there. So that's exactly where I think we're headed. That's stop one on the stop of many consecutive lower lows down this way. This nice move that we've had over the last 1490 plus days, I believe, unfortunately for the bulls, has come to an end. And we get back to some technical analysis. You can see here, we on that break we had, we were extremely negative here on both long and short stochastic, and well below zero, continuing to decline. And it looks like we're going right back into that area. You're getting some of that slingshot action. We may not be able to continue right at this point. We may need some more consolidation as the longer term stochastic has peeled back a little bit. But then again, if you as I look more across the screen, both indicators are in negative territory, so I think you probably will continue to see a breakdown here. And as I speak there, we just went another tick lower. I'm looking for any squeezes setting up or anything along those lines. It doesn't appear to be happening. We broke trend right here on the 67.65. Let me see if I can maximize this and show you guys. Yeah, we broke trend right here, right around the 1586 level. And you can see when we broke trend, you had a major gap down. So, and big volume came in there on the TMV indicator. You can see the TMV is the bottom of that yellow rectangle there. That's one of the indicators we use. It draws in your Keltner channels for you, and also indicates volume spikes. So obviously we had a big volume spike, and they tried to shake out the shorts right here with that spike back up on that candle. They went right up to the top of the Keltner channel, but a wise trader would have actually been loading their shorts up on that rise, and you've seen this move coming out of it. We may find some support here at S1, the first standard deviation. 2 standard deviations of the regression channel was down here at 1560, and again, I really don't see us finding support for a long time, because the A wave is beginning to cross zero. We're almost fully breached now, and once that happens, you're going to see just a massive sell-off ensue. And this regression channel that is currently on an incline, I noted it yesterday in a video, what a difference one day can make. And you'll see, almost like a seesaw, how overnight just this move right here is going to rebalance this channel again, because the tick charts only go out 5 days. This is going to rebalance to where it's going to be flat. At the regression line will be flat to even possibly slightly down going into tomorrow's action, and updating in real time, of course. And you can see the market will continue to follow regression, and regression will be down. So with the A wave on the short side, a squeeze already breaking out right here out of this consolidation. That was a perfect squeeze trade right there. You could have held up, sat on your hands in the pre-market here, or actually the market was open at this point, but you could have sat on your hands for the first hour of trading, as you weren't getting a clear sign here on TMV of the ADX increasing yet. And the first sign of a red candle here, you could have went short or said, I'm going to go short the next red candle on a lower low, and that was right there. And notice we broke to the bottom of the Keltner channels, and from there you had a nice clean breakdown. and we're still on the bottom of calendar channels, indicating a very bearish trend, and that's all the way out to 67, 65 ticks. So on a long-term basis, everything looks to continue this way. Zoom back out, you can see on your shorter term intervals, just one tick interval lower at 41.81. The slope of the regression channel is even sharper. It looks like we're headed for much lower prices right away. We're getting an uptick right now on the 144, and that's why traders, I have all these different Fibonacci intervals. So I'm not sitting here watching the 144. Oh, we're in an uptrend or in a downtrend. No, I know with some certainty here that we're in a significant downtrend here. The market is well off its highs, and all the higher intervals have continued to go down. We haven't had a significant spike in volume yet. The ADX has continued to increase, so there's no sign that the market wants to let up here. The A wave on John Carter's indicator is beginning to build momentum to the short side. The only indication of a pause here is the first indication of a yellow on the histogram here out of the squeeze, but you're going to want to see two yellow histogram bars consecutively for you to take any part of your trade off, and we obviously haven't seen any sign of that yet. If this bar does indeed print yellow, then you're going to want to watch closely on the next bar. If you're a scalping type trader, as you can probably lock in some profits there before you see any retracement. If you're holding long term, I wouldn't exit any more than one position, because this market's going to continue to the short side. Up here on your double stochastics, double moving averages, we are getting a little bit overextended here from our moving averages, but given the dynamics of the market, I don't think it's a big deal. I think that the strength or the weight of this move down is going to continue to pull these moving averages with it. So I don't necessarily think you're going to see a lot of mean reversion. You may see retracement, but not mean reversion. You saw perfect rubber band action, or slingshot that I referred to right here. You went long-term negative with the short-term. The short-term pulled back, went extremely positive, which was just a beautiful entry for you. You know it's overbought right there, and you had a beautiful move out of there to the short side, and you could actually take some profits right here, as you're seeing the short-term stochastic beginning to peel up over the long term, if you wanted to. I still think that the market's got more room to go to the short side, but nonetheless, I'll leave the update right there for a minute. You can see the short term has peeled up. The ergodic has gone positive on some of these intervals, so just watch closely here, folks. I wanted to bring you into the all products tab. We are at a 1.565 put to call ratio. We've put out 85,500 puts on the S&P 500 futures options to roughly 54,500 calls. If we go and look at the strikes we were looking at during the week, I believe we were trading the 1575 strike put. Let's see if that's moved at all today. Let me go in here. Bear with me. I think I have it in my pairs trader, my active trader. Okay, yeah, thanks traders. Yeah, see, obviously today's the 12th. Yesterday, or even this morning, this option was going for 25 cents. This put right here at 1575, and this is the type of trade we usually jump on. There's no time to expiration, as we noted here. You're looking at the 1575 strike, so we're about 2 handles out of the money, about 8 ticks, and you're going to see a lot of volatility there. The low, like we just pointed out, was 25 cents. The high was 260, so you're talking a tenfold increase. And the way we trade this is we watch our long-term stochastics and long-term squeeze indicators, of course, but then when we're actually moving in on the position, we come in and we look at the average true range for today and the 30-day average true range, and which is usually about $3, and we also look at the 10-day average true range, which is usually about $1, and it is. So we watch these two indicators, and I'm trying to give you an idea this morning where the high was. This is at 9:55 a.m. You saw your low right around in there. Okay, 9:39. So right around the open today. And let's see if we can find that on here. At 9:30. And again, yeah, right there, folks. If we draw a trend line, you can see the market had already started to sell off overnight. And if we draw a trend line here, when we saw this movement up out of downtrend, we were going to have a break with trend, and that's your perfect entry. And so you draw it from there and connecting off of your lower troughs right here, or higher troughs, and your break, you could have done it either this way off of that break, but a more high probability setup would be the more intersections you have. So here you have 1, 2, 3, 4, and the fifth one. That's 5 intersections of this trend line, with an ultimate break from an extreme of about 160, and then you saw a break, a zero line break, come down, and then a slingshot where your 100, your 6 turbo CCI came back all the way up to the same levels where the 14 period CCI had a zero line reject, and that ultimately took us into a deeper downtrend where we broke to new lows. So this was a beautiful entry on your 10-day $1 ATR Woody CCI, and see if we can find it here on the same chart for today. We're looking again right at the open. I think it's going to be right back here, a little bit farther back. And, imagine you're going to see that hook from extreme. Let's see. Yeah, so you see this down move here from extreme, and you're going to draw up, and I say this a lot of times, when you see a hook in the CCI that goes down beyond 200, it's one of two things ordinarily. You're either seeing a reversal, or you're seeing the establishment of a major trend, and sometimes it can be both of those things, just in the opposite order. You did have a reversal, but it was almost a preeminent sign that you were going to have a major trend down coming up soon. So we had this major spike, and then we had this move back up. You had to have the major spike to ignite the short rally, because you got a lot of people piling on when you saw prices dip down right here. And when you got the short rally, the market makers were able to shake out all these longs, or all these shorts, and they were able to rally it all the way up to an extreme level right here. So you could have again drawn your trend line on the hook from extreme, and you could have gotten in on this break right here, which is also a cloud or a ghost pattern, which is similar to a head and shoulders, but on the CCI, this is actually such a beautiful pattern. I see so many of them right here. So you have a ghost pattern, you have a hook from extreme, followed by that had been followed by a hook from extreme to the negative side, and a prior hook from extreme on the negative side. So you have similar action coming into the event, and then you see a ghost pattern break down, and then a shamu pattern where you had a zero line reject, but the turbo CCI went all the way down. So that should have been a slingshot, right, with a zero line reject. But when you fail right there, normally that slingshot would take the regular CCI back into an uptrend like that. But when you fail and you come back down and you end up doing another zero line cross back down, that's the Shamu pattern with almost like a zigzag, and that was a beautiful trade. And your first exit would have been on this crossover of the turbo CCI back through the CCI. And if you didn't want to get out there, there is another ghost pattern right here, setting up, coming back up to the positive side. So if you were just a short-term scalper on that move, you get out right there on the break back up of the ghost pattern that also came with a break of the zero line. And then you have a horizontal line break here indicating we were going to go short again. And man, there's just so many setups here today, and I'm glad to go back and show these with you guys. I'm gonna try and jump in some trades now in the afternoon, now that the trend has been established. I just thought it was a great learning opportunity today, and I wanted to take time to point these things out to you. It's not a big deal for me to have to have traded all morning. There'll be more opportunities, and obviously I forecasted this, so I did have some things set up already for the longer term, and I didn't need to be doing it on camera. But if you look at the long-term ATR, we are finding some support here from our moving averages. We've broken through the simple moving average, and we'll see how well we hold up here. You see the short-term stochastic has gone negative, so we'll check back in, but there's a good amount of strategy session there for you, and we'll see what else we can find for you throughout the day.